Okay, just wanted to thank everybody again for joining us. So I know we have a few more of our attendees joining us, but we'll get started. So I just wanted to introduce myself. My name is Tim Dinan. I'm an Assistant Director of Admissions with the Villanova University Graduate Tax Program. I'll go over just a few housekeeping items. You'll automatically be muted during this webinar. If you have any questions, you can use the chat box that we'll be monitoring, and we can help share that from there. And this session will also be recorded and will be shared upon the conclusion of it. And I will now pass it off to our faculty director, Professor Joy Mullen.
Hello, everyone, and welcome. As Tim said, I'm the faculty director of Villanova's Graduate Tax Program, and we are really thrilled to offer this webinar on various state and local tax issues arising out of the significant shifts we have seen to remote work and various types of remote work. And it is really exciting to have you joining us here today from near and from far for what we are anticipating to be an interesting and robust discussion. We have brought together, I think, an incredibly distinguished group of panelists, two of whom, Mike and Drew, teach in our SALT certificate program, and one who does not, at least not yet, but is also a leading expert in this field, Jennifer, and we are just so honored to bring them together today for this webinar. Moderating this discussion on behalf of the Graduate Tax Program is going to be our Professor of Practice and our in-house SALT expert, Mike Semes. So I'm going to turn this over to him to lay the foundation for the webinar, introduce the panelists, and kick things off. I know that there is a lot to cover, and I hope that everyone derives enormous benefit from it. I'm really looking forward to this. Mike?
Thanks very much, Joy. And thank you, Drew and Jennifer, for participating. And like Joy said, I expect this to be a very robust discussion. I invite people to ask questions during the presentation. We'll try to leave some time at the end, but feel free to ask them during the program, and we'll get to them if we can. And I'll start off by introducing Jennifer. Jennifer is a former chair of the Philadelphia Bar State and Local Tax Committee. She's co-chair of the State and Local Tax Practice at Chamberlain Hrdlicka. She's very active in the American Bar Association and various other organizations around the country. So Jennifer, thank you very much for joining us. We're really glad to have you.
Thanks for having me.
And Drew and I have known each other for many, many decades. And Drew is a former Big Four partner. He has been in-house state and local tax senior manager director at Fortune 100 utility company. Currently, he's a managing director at Grant Thornton. He's also very active with the Pennsylvania Chamber and the Philadelphia Chamber and the Pennsylvania Institute, a laundry list that I could take the full hour if I mentioned all of his qualifications. And like Joy said, we're also very, very happy that he is on the faculty at the Graduate Tax Program. So Drew, thanks for joining us.
Thank you, Mike.
Okay, I'm going to start sharing my screen and get right down to our presentation today. And we've titled it as remote work evolves, how will taxing jurisdictions keep up? And we're going to go through some history of how we got here, and also where we think we might be going. There's the contact information for the panelists. And we're also going to talk about how employers and employees' interests could diverge and could compete as a result of the tax issues. And then we also want to talk about not just the tax issues, but the other dimensions of issues that, or the other dimensions of the issues that can arise here. And is it possible to reconcile them? And we'll find out that that may not necessarily be the case, but we'll leave that for you to decide. And we hope that we give you a lot of information to consider and to provoke some thought on how some of these issues might be resolved and might be able to be reconciled. I also have down there at the bottom a link to an article, Remote Work Creates a Spectrum of State and Local Tax Issues, which Jennifer and Drew authored. a few months ago, and hopefully you find that a very informative source of information as well. So before we get started, I'm going to ask you to answer a couple of polling questions, just two very short polling questions. The first one is, has your employer modified its post-COVID employment policy to take into account how taxes are withheld? And we're asking that question for two purposes. One is to give us some background on the audience and where you might be coming from, and also to get us focused on taxes and withholding of taxes being one of the primary and most salient issues in this area. So I believe that the poll should be open. So if you could just take a minute to answer that question. Very good. We have about 23, 24. I just don't want to spend too much time, but I want to give as many people a chance to respond as possible. Okay, so let's go on to the next one. Or actually, before we go on to the next one, it's a pretty even split between those who have whose employers have modified their policy and those haven't. Slightly more haven't, but some have. Let's go on to the next question. Again, setting the landscape here for where your perspectives and where you're coming from. This is a little more in-depth question. Has your employer had discussions with tax, human resources, and other departments to determine the impact of remote work? And the answers are, haven't discussed it at all, have discussed with only tax, only with human resources. And the last one is, have you discussed it with other impacted departments? Sorry, I'm trying to read and navigate the polls at the same time. Okay, we'll give it another minute for these results. Wow. A significant majority here have discussed the issue with tax and other impacted departments. Well, I got to tell you, I think that that's really wonderful, A, that you recognize that there are all the dimensions to the issue and that you are taking active measures to, let's see, make sure that I show the results. 62% have discussed with tax and other departments. Well, great. So it sounds like we have a very informed group of attendees here today. So with that, Drew, I'm going to turn it over to you, and maybe you could tell us a little bit about how we got here, where we are, and where you think we're going to be going.
Yeah, at the risk of showing my age, I'm going to make a musical reference here. This slide reminds me of the Talking Heads song, Road to Nowhere, that ends with the question, well, how do we get here? And I think that's the question. And this is just showing the continuum of where we've all been. I mean, we all met with the abrupt arrival of COVID back in March of 2020, and everybody got sent home. We had, plenty of government mandates as to, stay-at-home orders and office closures in various jurisdictions. And largely the decisions were kind of made for us as employers or as employees. You will not come in until this date. And in many cases, jurisdictions provided relief, understanding that they can't impose taxes in the normal way if they're going to tell you that you can't operate your business the way you would want to operate it. So in some respect, I mean, that's thankfully behind us. I think we're well beyond the government mandated closures. I think we're moving out of the business closures for the most part, that businesses are open. I have a few clients who are actually just starting to return to offices, but I think they're on the very trailing end. And so we're into the last three, and I'm sure there's other permutations of this to come, the hybrid, the flex work, and the permanent remote. And it just really brings up the question of what are the tax implications of each of these? And is there a role that we should play? And I was so heartened by the response to that second polling question. When I say we, tax with others, I'm impressed with this group. I would have bet for a smaller number on that the tax people are sitting around talking about the tax issues. The HR people are running around saying, let's let people work everywhere as long as they don't quit, or we can hire them everywhere. The legal folks worrying about labor law issues in certain jurisdictions, but it's good that that it's a collaborative approach, and I think that's really what's going to need to happen. Ironically, I saw that Bill Gates was hosting right now, actually as we speak, or in 5 minutes, a live LinkedIn presentation. Please don't leave. He's hosting a presentation on the future of work, and I'm sure he drew off some of our attendees for that. But I mean, we're still at the point where we're trying to figure out where we're going. And there's 3 parties to this. Just keep that in mind as we go through this discussion. We're going to talk a lot about balancing the employer and the employee concerns on various taxes. We're certainly going to talk about employer concerns about the full breadth of taxes, but we also have the departments of revenue and the other administrators in the jurisdictions that have been and continue to try to address these issues. We don't always agree. They don't always have the luxury of being able to keep up with every possible development, but this is a continuum and moves on to something that maybe was spurred by COVID, but turns into a permanent change in the way all of us go to work.
That's great, Drew, and I really appreciate your musical reference. It's a little too early for me, but that's okay. I'll show my age as well. But one of the themes is you've probably already discerned, is that this is not just a tax issue. Taxes, obviously, for us, but I think even putting our work aside is a very important part of the issue. But Jennifer, why don't you talk to us about some of the other dimensions to this issue?
Sure. I mean, there's a lot we need to consider here, and this beautiful chart here, I give full credit to Drew for putting this together, and the next few slides too. But when we're thinking about what aspects we need to be concerned with, it's, again, as Mike and Drew mentioned, it's not just tax. There's employment law considerations, and then even within tax itself, it's not just withholding. We tend to think of withholding as one of the key ones, but there's also issues with sales and use tax. There's issues with income taxes, local taxes. There's concerns for financial statements. There's considerations for tax credits. So we'll get into all of this throughout the presentation, but this is sort of a multifaceted issue that we need to be concerned with. So with our competing interests, there's issues on the employer side and there's issues on the employee side, right? First on the employer side, administrative burden and costs, right? There can be additional reporting requirements. That can be on the sales and use tax side, right? There can be additional filing requirements, tax obligations, withholding, right? So all of these can be administrative burdens that are now imposed on an employer who decides to either have a remote employee or a hybrid employee in a certain jurisdiction where they aren't located. And even if we're looking at within the employer, right? There's competing interests between employer and employee, but there may be competing interests between what the employer's interests are, right? So they want to lower their administrative burdens and costs, but they also want to attract and retain the best employees. And in doing that, those two things might be conflicting, right? Because you might have, with lifestyle now, if we look at the employee, what do they want? A lot of employees want that flexibility. They want to be able to work where they want, when they want. So then that necessarily is going to tie into an administrative challenge for the employer to be able to offer that and to attract the best employees that they can in this sort of very employee favored environment that we have. So, and the employee, there's also, there's the desire to, lower the amount of tax that they have, right? But again, with the employee, that's another competing interest. They want their lifestyle, they want their freedom to do what they want to do. But as we'll get into a little bit later with these convenience of the employer jurisdictions, the amount of tax they're going to pay might depend on whether or not they have that flexibility or how that flexibility is worded with the employer.
And Jennifer, sorry to interrupt you there. I mean, but I also just want to point out to our audience that if you're not familiar with the convenience of the employer role, which I think all of us panelists agree is a misnomer, but putting that to the side, we're going to get into what that is in a little bit. Sorry, Jennifer.
No, that's fine. I think we can move on to the next. There we go. Yes. So our scale is starting to tilt a little bit here. If we look at the employer and we look at this sort of tax burdens, if you will, that they need to be concerned with when they have these remote employees, we have withholding, which again, we mentioned, we'll get into more, sales tax, income tax, local taxes that can be an income tax, can be a gross receipts tax, these fun little, business privilege taxes that we have. And then on the employee side, there's again that desire to sort of be free to do what they want. And again, that competes with the amount of tax that they're going to be paying. But those are sort of the concerns of the employees. Where are they subject to tax? Are they going to be entitled to any sort of refund if they're not working in the jurisdiction? The employees don't really have quite as many concerns here, right? But the employees, could end up, tipping the scale really, because again, we go back to that desire of the employer to be attracting the best employees. So they might be willing to deal with the administrative costs, deal with these increased tax obligations, depending on who they're trying to attract. And that also goes to sort of, I guess we would call them blacklist jurisdictions, right? Are there certain areas where jurisdictions where an employer might decide, look, this scale is tilting way too far. As much as we love you, we can't, be submitting ourselves to that jurisdiction. We actually had that problem. We had a paralegal that we really liked, but she was moving to California, and as much as we liked her, the firm was not willing to deal with the tax obligations and all the other fun stuff out in California. So, there is a balancing act here with employers and, trying to, really take these tax considerations, take these tax burdens into consideration when they're making decisions with the employees.
Yeah, and Jennifer, I think you put your finger on the pulse of the issue here, is that for smaller employers, for instance, where they've not been doing business in California, so they've been focused more on the East Coast, Southwest, whatever, and they have to evaluate, okay, if I'm going to hire somebody in California, not only what is my compliance burden, what is my withholding burden, but what are the other taxes that I'm now going to be exposed to? And we're going to be getting into some of those issues. Drew, do you have any additional thoughts on this and how you're maybe seeing larger clients versus smaller clients, how it may be more of an issue for a smaller client because it's new frontiers for them, so to speak, and as opposed to larger clients who may have been doing some of this already even before COVID?
Yeah, I mean, I think the easy answer is if you're a large business and you're operating just about everywhere, then getting into new states is probably not your concern. Perhaps you have labor law issues and Colorado that has wage requirements and other things about job postings you may want to stay away from. But even when we get into the nexus issues later, if that's a foregone conclusion, then in this hiring market, you're probably trying to get the best people anywhere you can get them. A smaller business, definitely, that starts with a smaller footprint, has a lot more to consider. I also think there is the employer versus employee balance. I mean, right now, I think what we see in the market is a lot of the power is with the employees in this tight labor market. But I think the employers need to be making these ultimately long-term decisions, not based on the expediency of, getting the right person, in a job today, but, where they want to be in the future. So they may need to show some restraint and like Jennifer said, maybe not get into California, even though that was the person you wanted to hire, because it's the right decision long-term. I wish you luck if you try to get out of California after you've gotten in. So I think there's the large and small balance. And then there is the employer versus employee. I mean, we know that things run in cycles, and we'll be in a different labor market at some point in the future where the employers have the jobs and the employees are lining up asking for the opportunities. Quite different from what we have right now.
And Drew, I think you just missed another musical reference about the Hotel California, right?
I did.
Thanks. Okay, I'm sorry. What was that, Jennifer?
Oh, nothing. That was just a chuckle.
I thought if you feel free to sing along, we're going to have a sing along at the end.
Yeah, so we've been flying this plane at maybe 30,000 feet, laying the background, talking about the issues from at a high level. Why don't we drill down and talk a little bit about some of the more particular aspects of the issues? Jennifer, do you
Sure.
want to talk to us a little bit about withholding and convenience of the employer rule?
Sure, I would love to. So when we're looking at our majority rule, we're going to withhold in the state from where the employee works. That seems to make sense, right? But we have some jurisdictions that apply something called a convenience of the employer rule, which, as Mike mentioned, is sort of a misnomer. So if you're working for your employer and you're working from home for your employer's convenience, then you're not subject to the tax of the jurisdiction where your employer is located. If instead you're working from home for your convenience, then you are subject to tax in the jurisdiction where your employer is, regardless of the fact that you're working from home outside of that jurisdiction. So we only have a few jurisdictions that employ this convenience of the employer rule, but they are all right near us for the most part. Arkansas obviously is not, but they are no longer convenience of the employer state as of 2021. Connecticut, Delaware, Nebraska, Philadelphia, and Pennsylvania, New York, and Massachusetts during COVID. We'll get back into that on the next slide. For the jurisdictions that do have these convenience of the employer rules, there's some things that we want to think about. The first, I would say, is a policy and crafting a policy that is clear. And the reason that you want to do this is, I think, twofold, really. So if you're an employer and you're saying, I'm not going to withhold on 100% on my employees because they're hybrid and they're working, 3 days in, 2 days out, right? If your policy is not clear, and you get audited, you can have that liability, right? So you need to make sure that your policy is clear. But if you're withholding 100% and your policy is not clear again, right? But you're withholding 100% but as the employer, it's not your problem anymore if your policy is not clear, right? Well, it's going to be your employee's problem, and they're not going to be all too happy with you when they go for their refund and the jurisdiction tells them, look, that policy does not apply. This is not one that is, well crafted to meet our standards for convenience of the employer, so you don't get your refund. So we want to make sure that our policies are in place and that they're clear and that they're saying what we think they're saying.
And Jennifer, if I could just go back to the previous slide, and what you're talking about here is it worth the risk? Because like you're saying, if the employer gets it wrong and withholds in the wrong state, even though it's the employee's tax that they're withholding, they're the ones who are on the hook. So that's just a massive potential risk for the employer if they don't get it right, right?
Right. Absolutely. Absolutely. And, it's something else to be aware of there is that, some jurisdictions will allow that, right? So Philadelphia is one of the ones that allows you to withhold less than 100%, and you bear the audit risk, right? If you decide to do that, you bear the audit risk. There are other ones like Wilmington that requires the employer to withhold on 100%. So that's just another, caveat to make sure you're aware of what your jurisdictions are requiring of you as the employer.
Right. And again, you're demonstrating, it's like 3D chess. We have, we're only still talking about withholding tax. We have it at the state level. We have it at the local level. We have convenience of employer states. We have other states. Query whether the convenience of the employer rule is constitutional, which we'll get into in a second. But then you layer on top of that, the things we're going to be talking about a little bit later, sales and use tax nexus, income tax nexus. It's all these balls in the air at the same time.
Yes, absolutely.
And Jennifer, if I can jump in, just because I know we don't have the slide on this, but I think it's an opportune time to make the point, is that you actually need to know where these people are. So that's a whole separate discussion. And we're talking about the technical rules, but I've given this presentation before and we've started with the data, which is, I don't know how many times I've had this conversation and you're 90% of the way through. And then you ask the question, do you actually know where your employees are? There's a very practical aspect to this. So this is more the theoretical and the tax technical aspect. But at the end of the day, you can't withhold if you don't know where the employees are. You can't properly determine nexus and some of these other issues. So I didn't want that to go unsaid, but there's data, and that's not necessarily an easy thing. If you were an office-based culture that had no reason, you weren't a public accounting firm that tracked where all your partners and employees worked, everybody came to the office pre-COVID, pre-remote work. you probably have to implement a system or at least some changes to be able to track that. And yeah, that's something that carries through a lot of these topics.
Well, and Drew, doesn't that, and Jennifer, doesn't that go to the second polling question? Because it's not just a tax issue, it's a systems issue, it's an HR issue, and it's really important to get all those impacted departments into the same room talking about this issue, these issues.
Yes, absolutely. It's a great point. It goes to that wonderful, the scale too, right? It's the administrative burden and, you know, how far does that scale start to tip?
Yep.
So moving on here with New Hampshire v. Massachusetts. So as I had mentioned on the previous slide, Massachusetts was a convenience of the employer-ish jurisdiction for about a year or so there. Prior to COVID, they had a standard, the majority rule, right? So you are only subject as a non-resident to tax in Massachusetts if your work was performed in Massachusetts. During COVID, they decided to take a status quo approach. So they wanted everyone to act as if they were still working in Massachusetts, even though they were working from their homes in New Hampshire or elsewhere. And so they wanted 100% withheld and, you know, sent to the lovely state of Massachusetts. The state of New Hampshire was not very happy with Massachusetts' position there, though. And so they sought to invoke the U.S. Supreme Court's original jurisdiction, and they sued Massachusetts based on Commerce Clause grounds and Due Process Clause grounds. And, you know, the U.S. Supreme Court is the original exclusive jurisdiction when you have two states suing each other, but they do retain, at least according to the majority of the justices that are on the court right now, discretion as to whether or not to hear those cases. So the majority of justices in this case decided that they were not interested in this case for one reason or another. And so unfortunately, we did not get a decision or any analysis from the High Court on Massachusetts policy. And SALT experts were pretty interested in this case because it would have potentially had some implications for these other convenience of the employer jurisdictions. But no need to worry because we have another case in the pipeline here. You know, it might take it 10 years to get to the Supreme Court, but it's there. So that's the in the matter of Zielinski v. New York State Department of Taxation. And Zielinski is a professor. He works in New York, but he lives in Connecticut. And this is not his first try at this. So about 2 decades ago, he tried a similar suit and challenged the convenience of the employer rule in New York. Unfortunately, he lost in New York and he appealed all the way to the U.S. Supreme Court, and the court at that time did not grant cert. So during July of 2021, after the Supreme Court denied cert in New Hampshire v. Massachusetts, Zielinski took up his fight again. He refiled and in the New York courts, and he essentially is raising the same arguments as he did 2 decades ago. But this time he's saying that, look, it's time to revisit the issue in light of changing circumstances. And it's really not all that different of an argument that we saw in granting cert for Wayfair, right? Times have changed and we need to reconsider our position here. And, you know, he has a point, right? So back 20-ish years ago now, right? There was remote work, maybe a little bit, but not to the extent there is today. You know, and COVID really accelerated the amount of remote work we're seeing, and technological advances have really changed in those 20 years to the point that, you know, is this really the same environment we were in 2 decades ago? No, I would say it's not anywhere near it. So there is, you know, an interesting push there to have the courts revisit it. Do I think the New York courts will side with him? Probably not, but perhaps the U.S. Supreme Court would be interested in seeing it. So we'll have to wait a little bit and see where that goes.
Yeah, and Jennifer, I mean, just look how long these cases take to percolate and to reach an ultimate resolution. And I don't know about you, but that's something that I find very frustrating, and my clients find very frustrating is, you know, we have to deal with this uncertainty for such a long period of time until a case gets ultimately resolved.
Absolutely.
Okay, Drew, what about other action that's going on around the country on these types of issues?
So, yeah, it's like whack-a-mole. These issues just kind of keep popping up. I mean, you have Zelensky, we had New Hampshire versus Massachusetts, you kind of had the high profile issues, but the localities are starting to get into this game a little bit. Ohio, there's a group called the Buckeye Institute that is, I think, funding and fighting taxpayer appeals. Ohio has the same sort of patchwork of local taxing jurisdictions that Pennsylvania does. So, every 10 feet you've walked into a new jurisdiction, they all have the authority to tax. And when you break things down to a smaller geographic area, then the remote work becomes more of an issue. I mean, a lot of people aren't leaving their state to remote work, but many people are leaving their locality, whether that's Philadelphia or whether that's a jurisdiction in Ohio. It's just a lot easier to cross the borders. And the jurisdictions certainly don't want to give up the traditional tax revenue. So they're fighting to keep it. They're fighting to pass laws that allow for the imposition of these convenience of employer type of provisions. And obviously the taxpayers, generally the individuals, are fighting back against it. So Ohio has a whole string of cases. The Missouri, I mean, the only two major cities in Missouri that have a local earned income tax are St. Louis and Kansas City. They've taken two different views. And if you sort of notice the geography, which of these is not like the other, Missouri is kind of out there geographically. Otherwise, we're kind of in the bullseye here on the East Coast with these convenience of employer issues. But Missouri has more of a political effort going on right now to, to prevent cities from imposing tax on remote workers. Kansas City has been giving refunds. St. Louis has been fighting tooth and nail not to give refunds. So I do think, the political environment works differently in some of these states, and they want to put some of this out to the voters. So I don't know where that heads, but I think it's probably another dimension to look at it. Philadelphia, Philadelphia was exceedingly generous with the relief under COVID. I mean, Philadelphia, they were very generous because, they have a very high wage tax on residents and non-residents. And again, with the geography, many of the non-residents were working in the suburbs or in New Jersey and not coming into the city. So from March of 20 to the end of June of 21, Philadelphia took a policy of restraint and basically said that if you are assigned to a Philadelphia location but working remotely, they wouldn't withhold the wage tax. That's now been turned off, which means the city is reverting back to its traditional convenience of employer interpretation. It's been their long-standing position, and one that always attracted some controversy. But I think it was a lot different when somebody said, "I think I'd like to work at home or work at the shore on Friday." It's one person a day or two a week. But when the whole workforce now is working, I mean, I don't think most people are back to 5 days a week anywhere, is sort of my presumption. So if you've got 10, 20, 30% of your time by design working outside of a jurisdiction, it is going to ratchet up the dollars that are involved and likely the controversies over that position, both the jurisdiction and the probably the employees. I don't see a lot of employers, but you don't need to go back to it, Mike, but is it worth the risk slide? I don't see a lot of employers kind of walking the plank on wage tax and saying, oh yeah, we think convenience of employer is wrong, and we think the Supreme Court will fix it eventually. We're not going to withhold. No, I mean, we're advising them. They're well advised to continue to withhold, and then it puts the burden back on the employees to go seek their own refunds. And again, that the value diminishes when you're looking at, is it worth fighting the city for a couple $100 versus an employer who's got that, extrapolated amount. And Mike, I think you mentioned earlier, or maybe Jennifer, Delaware and Wilmington. Wilmington takes the position that you withhold on everything, and that they, grant refunds on a case-by-case basis to the individuals who have to be certified by their employer that they were, in fact, working outside of the office. I think my own personal view is I think they've just sort of put up some barriers. They're convenience of employer, but they haven't been as generous with guidance and clarity as Philadelphia has been. So I think they're afraid to lose the revenue, but they don't want to give up some flexibility. So I think they've basically said, give us all the money, and if you want to come in one by one and ask for it back, I think at the end of the day, you may get it back, but it's going to be an effort. So.
And Drew, I think you're absolutely right. And 2 points that I just want to ask you about. What do you think from a budgetary perspective? Because Many of these cities and a state like Delaware, which doesn't have sales tax, is very dependent. Delaware, city of Wilmington, the Ohio cities, Philadelphia, are really dependent on this wage tax base. And what are they going to do? You combine that with maybe decreases in real estate taxes because employers are moving out of the city, or they don't have as much office space in the city. What is this going to do from a budgetary perspective?
It depends on who you ask. I mean, budgeting is it's like forecasting the weather. So, and the budget people know how to manage the numbers. So, it's an educated guess. I do think Philadelphia is an interesting case because there is so much reliance on the non-resident wage tax. It's such a large piece of the pie for revenue collection, and it is very mobile. And if employers all did what Jennifer suggested and go out and accurately document and maybe get a ruling from the city that says, I'm in 3 days, you're out 2 days, and all of a sudden, they have clarity that the withholding is at 60% and not 100%, it's a big budgeting issue. What I've seen with Philadelphia so far is that the budget director is looking at recovering and getting back to pre-COVID levels, either through wage growth, meaning, salaries have gone up and so wage tax would go up, or that the city is going to prevail on holding the line on convenience of employer. But I think it's a very big cliff. I mean, let's just say Zelensky goes to the Supreme Court and it happens in our lifetime, and convenience of employer in this new environment, isn't held to be constitutional. There's a huge budget hole, but I think, until that's clearly decided, I think people are budgeting more based on the status quo.
No, thank you. Thank you. Let's go through a hypothetical or two here, and let's just to reinforce this convenience of the employer rule and how it plays out in practice. And so let's say that I'm assigned to a New York office, but I live in New Jersey. That's my state of residence. So what happens if if my employer requires, and by the way, I think it would be more appropriate to be called the requirement of the employer role as opposed to the convenience of the employer role, but that's just my way of looking at it. So what happens if my employer requires me to work from home? I live in New Jersey. Well, we've already been through that under New York's rules. That's still New York withholding. Now, if the employer permits the employee to work from home, then that's, I'm sorry, I misspoke. If the employer requires the employee to work from home, in that case, the employer does not have to withhold New York, they would withhold New Jersey. If they permit the employee to work from home, then in that instance, they would have to withhold in New York. If the employer, on the other hand, and we're starting to see this, requires the employee to work from home for 2 or 3 days, say, then we could be in a bifurcated situation at 60-40, 40-60, New York, New Jersey. But the issue there, and Drew and Jennifer have hit on this a number of times, is data and evidence and policy. What data do you have to show where the employee was working, and what data is there in your policy? What evidence is there in your policy that says you must work, you employee must work from home? You are not permitted to come into the office because we're going to have hoteling. And then Drew, I think you have talked about this in other situations. Well, then how do you prove to the state or local government that they're only being required to work in the office 2 or 3 days and they're required to work outside? Is it because you've reduced your office space? How do you prove that that's the case? And then there was a question from somebody, one of the participants, about Philadelphia and when they would view a commute to be unreasonable. And if I understand that question correctly, the issue is not whether the commute is reasonable or unreasonable. And this is why I waited to answer until now. It's, does the employer require the employee to work from home, whether it's a 1 mile commute or a 100-mile commute? People have different lifestyles. And the issue is, does the employer require them to work from home, or do they require them to work in the office? Let's,
And Mike,
yes,
just to,
please. Yes.
for number two, so obviously here we have both New York and New Jersey saying that the income is subject to tax. And, sort of the issue is quote unquote resolved if for the employee, because they'll get a credit against their New Jersey income tax for the taxes paid to New York. But this sort of highlights one of the issues with convenience of the employer to a state like, say, New Jersey, right? New Jersey actually filed an amicus in the New Hampshire v. Massachusetts case. And in the amicus, they estimated that they would end up crediting $1.2 billion to its residents for income taxes paid to New York in the 12 months since March of 2020. $1.2 billion that they're crediting, that New Jersey is losing because of New York's convenience of the employer rule and their decision to credit their residents for the taxes paid to other states. So, it's sort of, why should New York be entitled to that tax simply because the employer didn't mandate that the person work, outside of the state?
Exactly. And Drew, I'll answer a question that you kind of hinted at, and Jennifer, I'd appreciate your input here, even though it's going to take a long time and nobody has a crystal ball about budgets. Nobody has a crystal ball about how the Supreme Court of the United States is going to rule on something unless maybe a case decision leaks. But in this type of instance, I think that the convenience of the employer rule violates the Commerce Clause, because it's taxing activities beyond the state's border. If the employee is working out of the office for 80% of the times, like you said, Jennifer, earlier, just like Wayfair overruled Quill because times have changed. People are working remotely. It's just not that unusual. And if that's where they're working, it seems like that's the state that is providing the benefit, and that's the state that deserves to get the tax. But we will see. I don't know whether, Drew, you and Jennifer have any additional thoughts on that issue.
Probably more so than we have time for on the constitutional issue. And yeah, and I've been harping on the Wayfair versus Quill argument. I don't think Professor Zielinski is, as they say, like the definition of insanity, trying to do the same thing over and getting, and expecting a different result. I think he has a reasonable expectation of a different result. I mean, Wayfair overturned Quill and said it was wrongly decided. So what about, and that was 26 years between those two. We're on roughly the same timeline, and there's been as much of a seismic shift in remote work as there was in online retail. So local consequences, Mike, on this. I mean, Jennifer cited the numbers for New Jersey from the amicus brief on what they would lose to New York. But I have this lingering question as to how long, is New Jersey just going to continue to allow the credit? They're one of the few states that allows a credit for local taxes. So, for those in South Jersey that may be subject to the Philadelphia wage tax, if your employer takes the conservative, probably well-reasoned view that they should withhold unless they have a well-documented policy, do you have any motivation to go back and get a refund as an employee if New Jersey is just going to give you the credit? I don't know if New Jersey would ever intervene and say, wait a minute, if your company had a policy, then Philadelphia shouldn't have gotten 100%. You should go back and get your refund from the taxing jurisdiction that collected the tax, not from us. But New Jersey seems to just kind of keep pumping out the money. I think they do it by raising the corporate income tax rate, and that just funds everything. But during COVID, Philadelphia was so generous with the relief, and it's a lot of money, that for, what is that, a 15-month period, 16-month period, it was unquestionable that you could go back and get your refund. But what if you just didn't bother? Because New Jersey would just let you throw a line on your gross income tax return as a resident and take a credit. That seems easier to me, but I do wonder, and I'm not trying to poke the bear with New Jersey to go back and say, hey, make everybody get their money back from Philadelphia. But it does seem to be, the collection does seem to fall to the wrong jurisdiction.
Jennifer, do you have thoughts on the constitutionality of the convenience of the employer rule?
Oh, Mike, I completely agree with you. It's unconstitutional. I don't think there's any question, but unfortunately we need a court to agree with us. But I just don't, I think there's so many issues with it from a Commerce Clause perspective that if I were a judge, I would have a real good time with it.
Yeah, but in the meantime, and we go back to that slide where we what is it worth the risk? The employer has no incentive to challenge it and to to do anything other than withhold. Then you get the competing interests of the employer and the employee. So in our time remaining, how about if we talk about some of the other types of taxes that that can be impacted when you have employees working remotely?
Yeah, I'll take this first one, Mike, and we'll maybe go somewhat more rapid fire through these issues. I think we wanted the deep dive on the employment issues, but Nexus rears its ugly head here. Obviously, if you've got physical presence through employees working in a state where they weren't working before, hopefully you know where they are, and you can track this, but it does raise sales tax issues, many of which for remote sellers were probably resolved after Wayfair. The thresholds were relatively low. That's been, what is that, 4 years now on Wayfair. I mean, most, yeah, I know most taxpayers have kind of gotten things aligned there, but there is the possibility of broader sales tax nexus. If you were staying out of a state, you were below a threshold. And again, probably an issue for smaller taxpayers. On the income tax side or gross receipts tax side, I think there are big issues. Jennifer mentioned sort of the blacklist states, I believe in the context of just either states you didn't want to get into, maybe it's for employment law, but maybe it's tax reporting. I can think of a lot of industries that still rely on nexus planning, that sell tangible personal property. And I mean, back in the olden days, the pharmaceutical businesses, companies that make a lot of money, industries that make a lot of money, and that have a profile that, if well managed, can keep them out of nexus in these states. And I got to tell you, one, IT employee, one accounting employee, one marketing employee, none of which would qualify for Public Law 86272 protection in a state where you were otherwise thought you were protected, is probably going to be a very bad answer relative to the benefit of hiring that one employee. So I think there's certain industries where nexus is still high on the radar, and I think you should be very cautious around that with remote work. And again, I think you have to track it. It's nice to have a policy, but if a state audits you and they find the person and they say, yeah, I work 2 months a year in Montana, you're in Montana. I think it's a big issue. I mean, there's been a lot of erosion of Public Law 86272. I mean, recently New York and California have come out and broadened their view of it in terms of website and interactive connections with the customers. So, but it's not a dead issue. And what you don't want to do is just completely shoot yourself in the foot and have, physical presence of an otherwise unprotected nature in these states that pull you in, for any of these taxes.
Right. And I think we could do another whole webinar on 86272 and the Multi-State Tax Commission's recent draft regulations on that issue. But no, you're right, Drew. That is another very important dimension of this issue. Jennifer, how about apportionment?
Sure. I just wanted to address, there's one question in the chat about Berkheimer, and we actually had discussed this in our planning calls here about whether the local tax collectors were, producing any guidance or anything for, and I assume this question is targeted at, remote or hybrid employees that are not in the tax jurisdiction that Berkheimer is collecting for and, seeking a refund. And there has not been any guidance. So that's a big silence from Berkheimer. I think Keystone, they all just have, I don't know if they're issuing refunds or not. If they're not, obviously you can give me or Mike a call and we'll be happy to make you the next Zelensky in the courts. But but right now, I'm not sure what position the local ones are taking other than Philadelphia.
Yeah, and Jennifer, that highlights the frustration that clients, taxpayers, employers have, because there's just a lack of guidance out there. So not only are there uncertain rules to follow, but there are in many cases not any rules.
Exactly.
Yeah. So why don't you talk to us about apportionment?
Sure. So a lot of states have moved to single sales factor, but there are still some that employ the 3-factor formula. So property, payroll, sales. Payroll for a remote employee, that seems, I would think, pretty obvious. But what about a hybrid employee? You know, what do we do with them? Where do we source? That's a big open question, I think. With the property factor, you know, some things we sort of forget about are the presence of you know, employer provided equipment, right? Your printers, your computers, you might have some inventory that remote employee has at their home. So the remote employee or the hybrid employee can have an effect on the property factor. The sales factor, for states that are sourcing based on cost of performance, which is roughly a third of the states that are still employing at least some form of cost of performance. If we're sourcing based on where the income producing activity is being performed, that could be where the employee is working from remotely if they're generating the sale. So, you know, you need to consider that in your sales factor too. A lot of states have moved away from cost of performance though. So if we're looking at market-based sourcing states, generally, we're not going to see that work from home employee affecting the employer's sales factor. There are, you know, certain situations where it might, for instance, if you have like software licenses that are being used by a customer's employees, that could affect your sourcing. But generally speaking, the market-based sourcing would not be very affected by the work from home employees. But, you know, those are some things to think about when we're talking about apportionment.
Thanks. Again, it's just so many dimensions to this issue, and one that I think probably people who, you know, states and localities that were issuing guidance weren't really thinking about when they relaxed their COVID standards at convenience of the employer, state or local jurisdiction, is incentives and credits, right, Drew?
Yeah, I mean, this was actually something I wrote an article about this back in 2020. We don't have the site here. I'm happy to share it, but it was pretty early on. It was more the theoretical of, you know, what might happen as we were all kind of hiding in our bunkers and thought, wait a minute, nobody's going to the location where the jurisdiction gave you a job-based credit for this. And the answer was essentially, again, similar, that there was understanding of COVID, and a lot of the times the jurisdictions extended the period by which you needed to create the jobs, but some of these jobs never went back. And I think there was an opportunity to renegotiate because you've had a material change in the business. I mean, if you had a factory, I would assume that after things open up, the employees went back and the workers went back to the factory. But if these were office jobs, you know, that's generally what we're talking about. Those haven't necessarily gone back. And I think, you know, it's probably a little late to be talking about proactive on this, but, you know, possibly, you know, before the states come back and try to claw back and ask for some of these incentives, you know, it's worth approaching the state, seeing if you can renegotiate something else or a longer time frame, or, you know, sort of lean on them for, you know, or get some leniency in terms of, you know, this change in the world that's happened. The other thing that we haven't really seen play out yet, but is worth keeping an eye on if you work in this area, is how are the states going to develop new programs for their own incentives to target? Are they going to target remote workers? We've seen a few states that have provided incentives for people that want to relocate and work remotely in their state. I think those are pretty novel. But the simple job-based, you know, I'm going to create 100 jobs and get this tax credit, just doesn't play out so well anymore, because it's really hard to guarantee that you will both create those jobs and that they will be in the jurisdiction. So it's one more area, and I probably should have predicated this on the fact that not all of these issues affect everybody. You know, we get to think about all of them with a variety of clients, but you know, fortunately, you know, maybe one or two or three of these issues, you know, affect you in your daily job, but wanted to make sure that you saw the breadth of things that are out there.
Right. And wouldn't it be the ultimate irony if a convenience of the employer state tried to claw back credits where the employee was working remotely, but they were still requiring the employer to withhold?
Spoken like a true litigator. Yes. I don't think it's irony. I think that's work for you.
I wouldn't be surprised also if some, I shouldn't disparage any state and local jurisdiction. I'm sure Philadelphia would never do it, but you know, you never know about some of the other jurisdictions around the country.
Well, but at that point, and I'll make this really brief, I meant to say this, what really prompted my thoughts on the incentives issue is, you know, Pennsylvania's main program is the Keystone Opportunity Zone program. And there are other states that have similar ones.
Yep.
And it's job-based in the sense that it's an apportioned credit, an apportioned benefit. And the two factors are property and payroll. Now, your office is probably where you thought it was, and your property likely didn't move a whole lot because of COVID, but your employees may have. So, you came in expecting to get 100% KOZ benefit, and suddenly, your payroll is now scattered about. Again, tie that in with the convenience of employer argument. It would be rather ironic to say that, well, your employees weren't in the KOZ, but we do employ a convenience of employer argument, and you still need to withhold on their wages. So we'll see.
Exactly. And we touched a little bit on the local tax impacts, but there are some local business tax impacts as well as withholding impacts.
Right. And I think that's important because a lot of times employers, when they're thinking about whether or not they want to have this hybrid employee or a remote employee, they're thinking about, well, okay, the state, right? Do I have nexus with that state? Oh, okay, I already have nexus with that state. I'm not worried about it. But they're not thinking about the local jurisdictions. And, there's a lot of different types of local taxes that we can have for businesses. And they can range from sort of these nuisance taxes that are like a simple fixed annual fee to something more like an income or gross receipts tax, or with Philadelphia, a hybrid of the two. So, a lot of times they're not centrally administered at the state level. So they're going to be collected and managed by these local jurisdictions themselves. So you need to be really aware of what's going on in the jurisdictions that you're allowing your employees to work in. And Philadelphia, again, did a great job, I think, during COVID of issuing a lot of guidance for local businesses in terms of what their positions were on their taxes during the pandemic. If we move to the next slide, we see, well, what about now? I think that's just a big sort of open question. Uh-oh.
Sorry, I was trying to juggle answering a question and reading it. Give me 1 second and I'll get you right back to where you are.
No, and I think that, that's sort of the open question, right? Where are we now that guidance is gone? We're sort of back to where we were before, except, we're not in the situation we were in before, right? We're in a very different workforce, a different, hybrid environment. So, we'll see moving forward.
Thanks. No, and sorry about that, Jennifer. I hope I didn't throw you off. But I think this is a question for you and Drew. And the question is, Pennsylvania is denying credits to Pennsylvania residents subject to New York withholding based on New York's convenience of employer rules, correct? And I'm not sure whether the question is denying the credit for personal income taxes at the employee level, or is the question about denying tax credits like Keystone opportunity credits? Does either of you have any thoughts on that question?
Yeah, I read it as.
I'm sorry, it's been clarified, credit for PA taxes paid to New York on the PA 40, so at the individual income tax level.
So the state has issued some guidance on this, and we've asked recently, and I thought they were, in theory, so there's two answers. In theory, I think they were giving credit for taxes to New York on the convenience rule. Anything that runs through that scheduled GL for credit for taxes paid to other states has always been a nightmare. So I'm not sure in the application of it that that you're necessarily getting the same answer as what the policy folks at the Department of Revenue have published and what they've said to us. So I'm not surprised, but I think the intention is to allow the credit. And I'm going to take this one real quick, Mike, and then leave us a couple of minutes to wrap up. This is kind of the all of the above slide. So for the tax accountants out there, all of this potentially has financial statement impacts. Every single thing we talked about, but especially I think that the primary issues are the nexus and the apportionment shifts. That can affect can change your effective tax rate. Hopefully by this point, many of these things have been addressed. We talked about it as this was evolving, and if you're a public company and you're doing this every quarter, this is not news, but it is important to monitor as people start to either return to the office or you hire in more remote jurisdictions. Like I said, you could be getting into new jurisdictions, new tax rates affecting your deferred taxes. It's usually the first place that you see issues sort of manifest themselves is in the financial statements if everybody's doing their job and paying attention to these issues. But it doesn't mean that everybody's gotten everything right, through the quarters in 20 and 21. I think there's probably new developments to keep an eye on for ASC 740 and ASC 450 for you tax accounting folks out there.
Yeah. Okay. So we're about at our end, and thank you to our participants for asking questions. And I'll just do my 10-second, 30-second wrap up and then ask Drew and Jennifer to do theirs. But what my takeaway from this is that this is a multi-dimensional issue. It's 3D chess, if you will. And there's a lot of potential risk for employers that I can see. And it really doesn't make a lot of sense for them to take on any of that risk when they don't have to, but that's competing with their desire to attract the best and brightest talent. So I think we're going to be seeing this issue continue to evolve over the next couple of years. But I think the solution is to get everybody who is impacted, everybody in the organization who's impacted, in the same room and say, okay, here are my issues. Here's what I need to get out of this, and here's how I'm impacted, and let's figure out how we get the best resolution. Drew?
Yeah, good. I wanted to leave Jennifer with the last word. No, I think it's evolving. I mean, the continuum we started with there just kind of pointed off to the right, and I think this is something that needs to be monitored. I mean, if you're a service provider, an accountant, an attorney, there's a lot of work that affects your clients here, and it's an interesting area. If you're in-house, I think it becomes the risk mitigation issue that we talked about throughout. How do you get your hands around this? We just can't sort of fall asleep on the issue that, hey, there was relief during COVID, because we're kind of beyond that, and I think there's issues lurking on the just beneath the surface. And when the years come up for audit, I think you want to be ahead of these questions, not reacting to the auditors.
Absolutely. Jennifer?
Well, you both have said it so great. I think the theme here has really been, sort of competing interests and sort of the complexity that we get into with these remote workers. And facts within a company are always just going to be changing, day to day. You can have new employees, every minute, depending how large your company is, right? So, with that change, that can change your legal analysis. The law is constantly evolving. So you just really want to make sure that you stay up to date on any of these changes and have a good way to monitor and track what's going on.
Thank you. And thank you again for all your participations. And Drew and Jennifer, thank you for joining us. We really appreciate it. Joy?
I'm just joining in to sort of close out this webinar. It has been so interesting, but I do want to start by again extending my huge thanks to today's panelists. I think even given Bill Gates' live presentation on the future of work, I think this was the place to be to learn more about the various evolving SALT issues with remote work. I think it was great that we also got some insight on some forthcoming potential constitutional issues and where some of you may stand on that perspective. Certainly, I think we're going to be anticipating many changes in the way people work in the coming years, but also in the tax laws in the coming years. So this is my opportunity to say, please follow our program, the Villanova University Graduate Tax Program, on LinkedIn to hear about future webinar offerings or to see the latest on what those connected with our program are writing about. As you heard today, Mike writes on this topic, Drew does as well, as does Jennifer. And there's going to be much more to come. I certainly hope that everybody got, I would say, even more out of today's talk than me. This is not my area of expertise, and yet I found it really interesting, so well done. Again, thank you so much to our panelists and as to our attendees. Wherever you happen to be, I hope that you're walking away with a lot of information and that you enjoy the rest of your day. But thank you for joining us.